Okay, so I am recording now. Let's go ahead and break down yesterday's setup. Like always, when I woke up, when I started looking at the charts, more or less 8 a.m. in the morning, it was this time. And let's see what price was doing. So let's start with the confluences. Like always, I want to see you all effective in the chat right now. So let me know first confluence. I know you all know them off by heart, but just let's go over them. Okay, market structure, well done. Second confluence, FIB, well done. Third confluence, supply and demand. Well done, guys. Fourth confluence, I see you're going one step ahead. Well done. Liquidity, extra confluences. Imbalance is one, well done. Session liquidity is another one. Point of control is another one, and entry model, well done, guys. So yeah, this is what I like to see. I like to see you all very interactive, effective, and without wasting time. So well done. This is my cheat code. This is what I use to make money in the markets right here. This is absolutely everything I use to make money in the markets. Nothing else than this to identify my trades. So like always, market structure. Obviously, we had a break of structure right here. Okay. We had this break of structure and we had this high that was never broken. So we had a bearish market structure on this area right here. Okay, we had a bearish market structure on this area. So that was our first confluence. Market structure, bearish. Okay. I hate the fact, sorry, just one thing I want to say. I hate the fact that the full screen is not like the full screen used to be. That before the trading view full screen was the whole screen. Now it's not. I'm not sure why. And I hate it, but yeah, just wanted to add that. I hope you can all see well and it's not annoying. So second confluence, we're looking to throw our FIB from the high to the low. In this case, we can throw it from right up here to this low right here. Okay. And then we're looking for a supply zone within the FIB. One thing I want to add before I continue is that right here, we also had this consolidation. We also had this, or distribution, name it however you want to. Right here, which price manipulated it, then broke it to the downside. So again, this is a area we are interested in looking for sells. Okay, so we have market structure, we have our FIB, then we are looking for a supply and demand zone within our FIB area, which is the most obvious one is this one right here. Okay, so this is the zone we want to look for sells. Okay, right here, this is the zone we want to look for sells at, and then we're looking for liquidity. So we obviously have this high right here, and we have this high right here, okay? In this case, yesterday, I only accounted for this one. Yesterday, we only accounted for this one then, because this is too big of a zone. Let's refine it a bit, okay? To spot a better entry. So if we were to refine this on the lower time frame, accounting for this liquidity, we could be looking, let's see, I think it was the 10-minute which had the best Sorry guys, because I have a thing bothering me here and I can't. I think it was the 10-minute, which was the best refined zone, okay, within the area, accounting for this liquidity, which was this one right here. So right now, we have the first 4 main confluences marked out, which are market structure, bearish. We have this breakup structure. We have this consolidation, which was manipulated, okay, and then broken to the downside. We have our fib from the high to the low, which gives us our premium area from this point to this point. This is the premium area we want to look for trades inside of it. Then we have our supply and demand zone, which refined into the 10-minute. We had this one right here, okay, and liquidity, we have this high, which we want to see it being taken out before we place any entry. So these are the 4 main confluences. Then let's look for the next confluences. Imbalance. So in this case, if we go into the 5-minute, there is no imbalance. It has been mitigated, so there was no imbalance. Let's see in the 3-minute. There was no imbalance, so we do not have that confluence. It's totally okay. Remember, those are extra confluences. So wait, before I continue, is this clear, guys? Is what I'm saying up to now clear? Before I keep on, is what I just said until now clear, 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 nice, very clear. Okay, perfect. So these are the first 4 confluences of my strategy. Now let's look at the extra ones. So imbalance, there was no imbalance. Session liquidity. Let's wait until price gets closer. So there actually was no session liquidity. Okay, there was no session liquidity either. Later, you will see how there was session liquidity within the same setup. And session liquidity, point of control, let's see if we had it. There was no point of control either. And entry model, we could argue there is a trend continuation entry model. So we could argue we had entry model. So we had 5 of the 8 confluences. It's okay, it's a decent trade. And I remember my first entry was right here at the liquidity high. My stop loss was right above this high right here. I was looking at this zone. And then let's just play it out. Nothing too crazy on the first entry. Okay, this was my first entry was on this high right here. Okay, and price then came straight to this 5-minute demand zone, which now we will look at why price held onto this 5-minute demand zone. Okay, price came and gave a sniper entry on this 5-minute demand zone. So like always, when I enter a trade, I like to take profits following risk to reward, also looking at fresh demand zones or inverse setups. Okay, in this case, price just gave an inverse setup right here. Following the confluences, price just gave an inverse setup right here. So this could have also been a great take profit area where we could take profits. Okay, so this was the first entry we took. But now, if we look again at the same confluences, at the same setup, okay, and we focus on this zone above, which price did not tap in by very, very little. Okay, right now, looking at the same setup, looking at the same confluences, if we pay attention, now we have market structure still bearish. We have fib, okay, we have all of these confluences we were naming before. Okay, you see price gave a perfect rejection to the fib level, which is where we entered. So we have supply and demand, liquidity, all of this, but now we also have an extra confluence, which we did not have before, which is session liquidity on this zone. Okay, right now we have the Asian high right here. So right now we have the Asian high right here. So this would mean we have 1, 2, 3, 4, 5 session liquidity and 6 entry models. So 6 of the 8 confluences. And now is when price really did give the good move. Okay, I did not re-enter. I had enough with the first move. And now just looking at the same confluences, price sweeps the session liquidity. And it did spend a while on the zone yesterday. Okay, very, very choppy price action on this area. But still just looking at the same confluences now with session liquidity. See, this is the good move. We were sort of expecting here, but price gave it after sweeping the liquidity. Okay. And let's say this was the best move of yesterday. So ideally, turning right here, stop loss at the top of the zone. And then just targeting liquidity, targeting looking at risk to reward, or maybe even targeting this low right here as the main take profit, which price then sweeps it. It eventually sweeps it, as you can tell right there. So is this clear, guys? Do you see how at the same setup, once it sweeps the session liquidity, it's like, I really like setups accounting for session liquidity. It adds more weight to it, as you can obviously tell. That's when price gave the good move after sweeping the session liquidity within the same setup. So in this move, the first move, we had 5 of the 8 confluences. Price gave a decent move, but nothing too crazy. On this move, we had 6 of the 8 confluences. Price gave a 150 pip move. Okay, so is this clear? Now we will look at the importance of volume periods in the market. So let's go ahead and answer questions on what I've just explained. Ask me whatever, guys, and I will answer. And then we will move on to something important I want to share. Can we mark session liquidity from weeks ago as a session liquidity? You can mark it. I have never tested it. I am not sure about its effectiveness. I like to look at the previous session highs and lows. Okay, so if I am trading London session, I like to look at the highs and lows of the previous Asian session. If I'm trading Asian, I like to look at the previous highs and lows of New York session and so on. You have the indicator name on session start and ending. I'm not sure what you mean with that. Session indicator is called sessions. Sessions by Luxalgo. So you have the name right here, sessions by Luxalgo. Once we open a chart, how far back do we look for a setup? I like to look at the previous 1 or 2 days maximum, previous session, from previous session, all the way to 1 or 2 days maximum. I don't like to trade based on what has happened months ago. and it's not my style of trading. Point of control indicator name SVP. SVP. And yeah, this is why you not take the supply over there? What supply over there? So I think you need to develop a bit more. If there is an unmitigated area in the history, can we still trade it or it would be invalid? You can obviously still trade it, look, for example, but what I would advise in that case, you see, for example, look, if you remember last Friday, when I said monitor, and this was the zone I was saying to monitor, this one right here, you remember? This was the zone I said it was good to monitor. Let me copy this, delete it, and remove everything. So if you remember, this was the zone I said last Friday to monitor for potential buys. This one right here. But because I do not trade, as I said, 18th of July, I do not trade what happened 1 week ago. What you should do in this case is wait for a lower time frame setup within the zone following my strategy. So if I go into the 15-minute time frame within the zone, because entering aggressive on such a old zone for me, it's not something I like to do. And look right here, we have a good example. So this was yesterday. Oops. During London session, during London opening exactly, price created this change of character in the zone with volume, as you can tell. Well, now we just lay out the confluences. Okay, so market structure, price creates this change of character within that zone. This is how I personally trade all zones. We trace our fib. Let's see where the high is at. Okay, in this case, trace our fib. We look for our demand zone within the fib. Let's see if price left any liquidity. Well, price left this low right here. We could argue this could be our liquidity. Okay, imbalance. We do have an imbalance right here. We have an imbalance right there. Session liquidity. There was no session liquidity. I know. Point of control. It was what? 15 pips away. Nah, you could account for it or not. I am not going to account for it. Entry model, neither. So we had 5 of the 8 confluences. And price then came, reacted perfectly to the zone. This is how I personally would trade an old zone, as I do not trade aggressive zones, which have happened long time ago. But the way you can trade them is by doing like I've just done, looking for a setup within the zone. Okay, and here you could obviously just place your trade right here. Maybe just look for this high. Do I trade once there is a change of character or break of structure? I always look at market structure before I place any trade. I always look at market structure before I place any trade. So in this case, I have this change of character, then I look for a trade. But why did this change of character work? This brings us to the next thing I wanted to cover on today's lesson, okay? Which is the importance of session openings, okay? Most of the times, the opening of a session will determine the direction price will have throughout the session. So let me explain this. If I go right here, okay, price was bearish. If I just grab this, zone, okay, right here, price was bearish, okay, and let's have a look at right when London session opened. This is the first candle of London, okay, this one right here at 9 a.m. my time, as you can see down here at the bottom. And with loads of volume, London session broke the previous high, giving the change of character, okay? And if you remember yesterday on live, I said, given this change of character with such high volume during London opening, most likely we are to expect a bullish London session. Okay, so we had this opening with loads of volume, breaking the last high, and then price gave the perfect setup with my strategy. Okay, which was the rejection to this zone, which is the setup we just looked at. And then price just turned bullish throughout all of the London session. Okay, price just went bullish all of the London session until New York opened. And once New York opened, price, you see, now again. Let's have a look at the exact same thing I was just saying right now. So, London session price, you see it's pretty bullish. And the first candle of New York, you see right here, New York has opened. This is the first candle of New York. Very bearish candle, very, very bearish. If we go into the 3-minute, if it broke, no, it did not broke much structure, but it was a bearish candle. The New York opening candle, and then price just went bearish all of the New York session. And again, based on this first candle, you could have also identified a setup following my strategy. So New York session opens bearish, creates another change of character. Creates another change of character, which raise our fee from the high to the low, just following my confluences from the high to the low. We look at a supply zone. This could be the supply zone, but as it's a very thin supply zone, we could even enter at the fib area, because this would just give us a 17 or 18 pip stop loss, and then just target whatever. Okay, and again. Oops, so here price would have triggered us right there. And then you could have entered just based on the first institutional candle given during the London opening, or sorry, the New York opening in this case. And then price just went bearish all of the New York session. And also, something I also like to look at is the supply and demand zones left during the session openings, okay? Those are also very relevant for me, for my trading. So for example, in today's setup, which I have it here, I think I have it here, not here, then here. So this is today's setup. One thing I like about this setup, okay, is that this candle we are looking at, it's this 5-minute candle right here. You pay attention, it's this 5-minute candle. This candle was left more or less at the start of the New York session before price started rallying to the downside. So this is why I also like it. This was left during a high volume period where people are placing their orders. So it's an interesting zone to place our or to look for a setup, knowing that here there's volume, knowing that people are looking to trade from here. There's remaining orders from yesterday here or whatever. Okay. So let's see your questions. So is this clear? Before I answer some of your questions, is this clear, guys? Is all of this clear? Let me know in the chat. Yes, yes, clear, clear, perfect. It's very simple. It's very straightforward. You just have to get used to. You just have to get used to try and identify what the big players are doing and ride with them. That must be your focus always, okay? So now let's see your questions. How long will you usually wait for price to come to your zone? What time will you walk away with no trade? So my trading time, okay, is from London opening, okay, more or less from 9 a.m. all the way until, let's say 30 minutes or 1 hour into New York session. Okay, very few times I will place trades after 4:30, 5 p.m. my time. These are the times I like to position myself, because if you position yourself during this time properly, then you can ride all of this move without any risk or more calmly, okay? How would we identify the highs and the lows to place the fib? Please, Danny, check the vault. There's a vault lesson on Fibonacci. Please check it out, because if not, it's very boring for most. But there, it's explained in a live lesson. Sorry, in a recorded lesson. Can you explain imbalance? Also, Doppler, please check the recorded lessons. Guys, like I always say, if you want to make it in trading, the least amount of work you could do is going over absolutely all of the recorded lessons and taking notes and so on. That's the least amount of work you could do if you want to become a good trader. So somebody says, can you explain the liquidity sweep with more detail? So like always, guys, liquidity sweep just means that price takes out a high or a low. You also have a great lesson on liquidity on the vault. Please check it out. But essentially, liquidity sweep just means taking out the high or the low. Okay, so for example, right here, we have the Asian high, which was left here. A liquidity sweep essentially means price just taking it out. Okay, this is just this is a sweep. But us, what we like to see is we like to see a sweep, then we like to see a setup following our strategy or whatever to trade the opposite direction, okay? Can you use New York and London highs and lows as session liquidity just the way we use Asian? Absolutely. Absolutely. For example, here we have the New York high from the previous day. You see price swept. Oops. As you can see, price swept it during yesterday Asian session, swept New York high, then gave the setup. Okay. Here we have, well, in this case, this is the Asian low. Price sweeps it, then moves a bit to the upside. And this you could just spend the whole day looking at this. Here again, we have the sweep of this low. Then price gives some move to the upside. Again, you want to follow the trend, okay, most of the times. Here again, we have the London. So here, we have the London low. Here we have the London low, price sweeps it, then moves to the upside. That's it. For this, you will find plenty of examples. Here, for example, price swept the Asian low, gave the move to the upside. But then you can use all of them exactly the same, yes. Me personally, I like to focus mostly on New York, sorry, on London session, taking out Tokyo session, okay? So yeah, guys, the questions on liquidity, the questions on imbalance and so on, please check out the Vault videos, okay? There's lessons on each and every single one of these concepts. Check them out and you will understand it perfectly straight, like. Does the fib level work only for gold? No, it works on absolutely any pair. You have to understand the logic behind the fib. The fib just doesn't mean anything to me. It just means it's just a way for me to see where the discounted or premium prices are within an impulse or a retracement. So is it clear, guys? I will now be uploading the lesson. I will now be uploading the lesson onto the Vault so you can go over it. So the last question I will answer. So from you just explained about the direction the session will be going is determined on the opening of the session. Does that mean London session is bearish due to bearish opening? For today, you mean? We will see. Let's have a look. Like this is not always, okay? Not always, but many times this you have to get used to it. Okay, you have to get used to reading the volume, reading what is going on in price. So let's see. 15-minute time frame. So no, today's London session, like it really hasn't done a break of structure with volume. Today's London session will most likely consolidate and hopefully when it comes closer to New York, we get the spike I'm looking for, but it will most likely consolidate because it's not like yesterday price, right during London opening, price broke structure with loads of volume. That's a clear indication that the session will be most likely bullish. There's a high chance. Remember, not everything is certain. But in today's opening, price was just consolidated. If we had a strong break right here, so from the opening, a strong break to the downside, okay, more at the opening, the first candle or so, then we could think of a bearish session, okay? In this case, it's not that clear. As you see, price rejected during the opening. So this is the opening candle, price rejected. Price rejected again, therefore it has just been consolidating, which is pretty much what the opening has told us. Price has failed to break any structure, so just rejecting. So guys, I will be now uploading the lesson. Thank you all for joining. I hope you enjoyed the lesson and you have learned something new. And yeah, I will see you all now. I might be going live. I will let you know now. And yeah, see you all now. Have an awesome day, team. The lesson will be recorded and stored in the vault right now. Goodbye, team.